In this video, we'll be talking about, as day traders, why we use stock charts and the type of stock chart we use. The type of stock chart we use is called the candlestick chart. The reason why we use a candlestick chart is because it gives us all the information that we need to make our decision in terms of buying and selling. Each candle or the formation of the candle tell us a story. So basically, if the candlestick is showing a specific price range, it's going to tell us either it's time to short the market or short that specific stock or go long the specific stock. So I'm going to teach you guys how to read the candlestick. So we're going to tune in onto my whiteboard, my handy dandy whiteboard on the computer. All right, let's jump in. In the market, we have two sets of candles. We have the green candle, which represent bullish, and we have the red candle, which represent bearish. Do not make fun of my drawing, guys. I'm not the best drawer. Right? Let's put the wicks. And in the market, this one is telling you or giving you an idea of price going down, and this give you the sentiment of price going up. All right? So how do we read these? Here we go. For the bullish, right here would be the open. Sorry, open, and right here would be the close. So this is where price opened at, and this is where price closed at, right? Then we have the wicks. We have the two wicks. This right here give you the high, the highest the price have went, and the lowest the price has went low. Right here. So now in the bearish candle, it's the total opposite. This right here would be the open, and right here will be the close. The wicks are the same. So this is the low price, or the high price. You guys get it? So we have bullish and we have bearish. So we use these candlesticks because it gives us an idea of where and when to actually buy. So we're going to tune in to our stock chart right now and kind of read what it's saying. So we're going to jump in on right here. So as you can see, we're live. Let's make this a little bit bigger. Matter of fact, let's use the 1 minute. All right, so we have the 1 minute. So as you can see, we have the bearish and we have bullish candle. So as you can see right here, the price action opened up right here, and I'm gonna open this up and it will tell you right here. So price action opened at 33.66 and it went to a high of 70. So you can see 33.66 right here. And it went to a high, which is the wick right here. You probably can't see it because my cursor, but the little wick right there, let me zoom in a little bit more. So you have the wick. So this is showing you the highest it went on this candle. It went all the way to a high of 33.70, right? Then it closed at 33.16 and went to a low of 32.88. So this is just giving you an idea of what is going on in the market. So the fact that this candlestick had a wick and hit the price range of 33, a high of 33.70, and it didn't go higher, this is just showing you that there is some type of either resistance or this specific stock want to continue to go down. Right? Then you see it went down, and then it hit a support area, which the support is where it's the low. The lowest it went was 32.88, right? And then it didn't go any lower. And as you can see, once it hit the low of 32.88, it went up a little bit more and closed at 33.16. So it bounced from that 32.88 and it closed at 33.16. So this is telling you that there's a lot of buyers, or you could say there's support at this area of 32.88. And as you can see, you went to the next candle. This one is called a doji. The doji candle is a sign of indecision. This is why you see the green candle in the middle. It's not big, or it's not big in a sense. It's a small little speck. You can see it here a little bit, and it's vice versa. You can get dojis on a bearish candle as well. So you can see that price opened up at 33.35. It went to a high of 33.17. So 33.17 is right here. And then it went to a low of 33, and it bounced off that 33, which is support, and then it closed close to the open, which is 33.18. So you can see this candle should have been a red candle. But as you can see, the wick is showing you each time the wick go up, it's showing you that it's changing direction. So this is showing you or giving you a bullish sentiment that the stock price want to actually go up a little bit more. And as you can see, we got a green candle here, and we had the wick again at 33.72. And look at it right here. We had the same wick at 33.70. So it's like a 2 cents different, and it couldn't really break above this price range. So what happened? It held, and then you finally had a red candle because there wasn't enough buyers to actually push the price above that 73.72 or 33.70 area. So you get the little pullback, and then what you see, it tried it again. It went to a high of 33.73, and then it couldn't break. So you get another red candle because there's a lot of resistance up here. So in this range from here, let's draw a candle. I mean a line. In this range from here, there was some type of consolidation. And once you get that break, it continued to go up. So as a day trader, we need these candlesticks to give us an idea of when and where to buy and sell. So me seeing this wick will give me an idea, like maybe I should actually try to get in at this price, around this price range. But do not get me wrong, we do not only just look at candles, we also look at the level 2. We have the level 2 right here. The level 2 also give us all the information, but that's just a different story. We're talking about the candles. So this is one part of what we use to give us the information we need to actually make our trade. All right, guys. So like I said, we have the open. It's a red candle, bearish candle. The open is always at the top. You have the wick right here is the high, and the bottom right here is the low, and then the close is right here. Green candle, the open is at the bottom, and the close is at the high, and the wick is the same. The wick is the high, always the high, and always the low. So guys, hopefully you guys learned something, and please smash that like button if you actually found, this content of use for yourself. And thanks you for joining me. It's Key Life Trading. Peace.